Bitcoin just posted its strongest week since September. Markets are still nervous, sentiment is still sitting in fear, and yet somehow Bitcoin is quietly holding above $71,000. Meanwhile, regulators in Washington are suddenly trying to figure out crypto, geopolitical tensions are still rattling global markets, and traders are once again asking the same question. Is this the start of the next leg up, or just another calm before the volatility storm? Let's break it down.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Let's start with a quick look at the market as we head into the new week. Bitcoin closed the weekend trading just above $71,000, currently sitting around $71,400 on the daily chart. Over the past week, BTC has quietly put together one of its strongest performances in months, up roughly 8 to 9% on the week and more than 13% since the Middle East conflict escalation earlier this month. From a technical standpoint, Bitcoin appears to be consolidating in the $70,000 to $72,000 range, with short-term support building near the $70,000 level and resistance forming around $72,000 to $74,000. Momentum indicators, like the stochastic RSI, are beginning to push toward overbought territory, suggesting the market may be preparing for either a short-term cooldown or a breakout attempt. Ethereum is showing a similar stabilization pattern. ETH is trading around $2,090, continuing to hold above the $2,000 psychological level after the sharp drawdown earlier this year. While Ethereum hasn't matched Bitcoin's recent strength, it has been quietly forming a base between $2,050 and $2,120, which traders will be watching closely for signs of renewed momentum. Looking at some of the other major altcoins, XRP is trading around $1.41, attempting to recover after the heavy volatility earlier this year. Solana is sitting near $87, continuing to consolidate after its February sell-off. Both assets appear to be stabilizing, but remain well below previous highs, reflecting the broader cautious sentiment across the altcoin market. Now let's zoom out to the broader market. The total crypto market capitalization currently sits around $2.43 trillion, with 24-hour trading volume near $56 billion. Bitcoin dominance continues to climb, now hovering around 58.8%, showing that capital is still concentrating heavily into Bitcoin rather than rotating aggressively into altcoins. And speaking of sentiment, the Crypto Fear and Greed Index has climbed to 32, moving out of the extreme fear territory that dominated earlier in the month. That's still firmly in the fear zone, but it's a noticeable improvement from readings in the low teens just days ago. Historically, markets tend to begin stabilizing when sentiment shifts out of extreme panic, though it often takes time before confidence fully returns. So, heading into the new week, the market picture looks like this. Bitcoin is consolidating near $71,000, Ethereum is stabilizing above $2,000, sentiment is slowly recovering, and macro forces, particularly geopolitical tensions and regulatory developments, continue to shape the narrative. Which brings us to the major headlines driving crypto markets right now. And when we come back, we'll break down the biggest stories shaping crypto over the weekend. Stay with us.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Alrighty, welcome back. Now, our first headline today is about how Bitcoin just delivered its strongest weekly performance since September of 2025. BTC finished the week up roughly 8.5%, and if you zoom out a little further, it's now up about 13% since the Middle East conflict escalation late last month. That's a pretty impressive move, considering the amount of geopolitical uncertainty still hanging over global markets. So let's break it down. Who's behind the move? A mix of global traders, institutional investors, and large asset allocators who appear to be shifting capital toward Bitcoin as traditional markets struggle with volatility. In other words, the same institutions that once treated crypto as a fringe asset are now increasingly treating Bitcoin like a macro hedge. What actually happened this week? Bitcoin surged past the $72,000 to $73,000 range midweek, marking its strongest performance in roughly 6 months. Even more interesting, during that period, BTC outperformed tech stocks, gold, and broader equities, which is something we haven't consistently seen in previous cycles. That suggests Bitcoin may be starting to decouple from traditional risk assets, at least temporarily. Where is the action happening? Most of the buying activity appears across spot markets, perpetual futures, and U.S. Bitcoin ETFs, with price action now consolidating in the $71,000 to $72,000 range. Right now, Bitcoin seems to be building a base around $71,500, which traders are watching very closely. Why did this move happen? Part of it appears tied to geopolitical tensions surrounding the Strait of Hormuz and broader Middle East instability. As oil prices spiked and traditional markets wobbled, Bitcoin started behaving less like a speculative tech asset and more like a relative haven. Add in institutional inflows and a wave of short covering, and suddenly the market had enough fuel for a strong weekly rally. So where could things go next? If Bitcoin continues holding above $70,000, the next major resistance zone sits around $74,000 to $75,000. A clean break above that range could open the door to another momentum move. But if geopolitical tensions flare back up or macro data surprises the market, a retrace toward the $68,000 to $69,000 support zone is still very much on the table. Either way, one thing is clear. Bitcoin just reminded everyone this week that even in uncertain markets, it can still move very quickly. And that sudden strength may already be changing the mood of the entire crypto market. Because after spending weeks deep in extreme fear, trader sentiment is finally starting to shift. When we come back, we'll look at the fear and greed index jump that has traders asking if the panic phase may finally be ending. That's next.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
Welcome back, everyone. Now, while Bitcoin has been quietly holding above $71,000, something else in the market is starting to change. Trader sentiment. The crypto fear and greed index has climbed to 32, moving up from extreme panic levels earlier in the week. Just a few days ago, the index was sitting between 13 and 16, deep inside extreme fear territory, the kind of environment where traders are convinced the market is about to collapse. Now, the index has moved into the broader fear zone, suggesting confidence is slowly beginning to recover. So who actually tracks this indicator? Sentiment metrics, like the fear and greed index, are monitored by both retail traders and institutional analysts, using data from platforms such as Alternative.me, CoinGlass, and BitDegree. The index itself aggregates multiple inputs, including volatility, market momentum, social sentiment, and trading activity to measure the emotional state of the crypto market. And over the weekend of March 14th and 15th, that sentiment shifted noticeably. After spending more than a month in extreme fear, traders are finally starting to move away from the panic phase. Much of that shift appears tied to Bitcoin's recent stabilization and weekly gains, which helped ease the anxiety that had been building during geopolitical tensions and earlier market drawdowns. But it's important to remember something about sentiment indicators. They're often contrarian signals. Extreme fear historically appears near market bottoms, while extreme greed tends to appear closer to market tops. So the fact that we're still sitting at 32, firmly in the fear zone, actually suggests the market hasn't become overly euphoric yet. Looking ahead, sentiment could continue improving if Bitcoin holds its current range and macro data starts cooperating, particularly things like inflation reports or easing geopolitical tensions. If the index pushes toward neutral territory above 47, that would signal a broader recovery in trader confidence. But if geopolitical risks spike again or markets face fresh macro pressure, sentiment could easily slip back into extreme fear below 25. For now, though, the message from sentiment indicators is pretty clear. The panic phase may be fading, but confidence still has a long way to go. And that cautious sentiment is showing up directly in the price action. Because while Bitcoin just delivered its strongest weekly performance in months, the market has now shifted into something very different: consolidation. Bitcoin has spent the weekend hovering near $71,000 to $72,000, with the broader crypto market holding steady just below the $2.5 trillion mark. So the question traders are asking now is simple. Is this consolidation the launch pad for the next move higher, or just a pause before the next round of volatility? When we come back, we'll take a closer look at what the market is actually doing right now. Stay with us.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at WholeShotCoffee.com.
All right, so let's take a closer look at what the market is actually doing right now. After last week's rally, Bitcoin has shifted into a tight consolidation phase. Throughout the weekend, BTC has been trading roughly between $70,900 and $71,700, hovering right around the $71,500 to $72,000 range. That's only about a 0.9% gain over the past 24 hours, which may not sound dramatic, but after a strong weekly rally, sideways price action like this is actually pretty normal. In many cases, consolidation and how markets build support before the next move. Looking across the broader crypto market, the picture is fairly similar. The total crypto market capitalization is currently holding between roughly $2.46 trillion and $2.51 trillion, showing that the market has largely stabilized following the volatility earlier in the month. Ethereum is trading around $2,090, staying within a narrow band between $2,080 and $2,100, while Bitcoin dominance remains elevated between roughly 56 and 59%. That dominance level is important. It tells us that most of the capital flowing into crypto right now is still concentrating into Bitcoin rather than aggressively rotating into altcoins. In other words, the market is still in a risk-controlled phase. So who's driving the activity during this consolidation period? Primarily spot traders, derivatives traders, and institutional investors, including flows coming through U.S. Bitcoin ETFs. However, because this is weekend trading, overall volume is typically much lower, which naturally keeps price action confined to tighter ranges. And the reason we're seeing this kind of sideways movement is fairly straightforward. After the midweek surge that pushed Bitcoin above $72,000, some traders began taking profits, while longer-term buyers continued stepping in on dips. That balance between profit-taking and institutional demand is what's creating this current equilibrium. Now, the next move will likely depend on which side wins that battle. If Bitcoin can break convincingly above $73,000, momentum traders may push the market toward the $75,000 range. But if the market loses the $70,000 support level, the next key zone to watch would sit closer to $68,000. And with major macro events, including upcoming inflation data and Federal Reserve signals still on the horizon, the market may not stay quiet for long. But that consolidation isn't happening in a vacuum, because one of the biggest forces influencing markets right now isn't coming from crypto at all. It's coming from global geopolitics. And that's raising a bigger question investors are starting to ask. Is Bitcoin beginning to behave less like a speculative tech asset and more like a global macro hedge? Let's take a closer look at how geopolitical tensions are shaping the crypto market right now. That's coming up next, after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Now, one of the biggest forces shaping markets right now isn't coming from the crypto industry at all. It's coming from global geopolitics. Over the past several weeks, rising tensions in the Middle East, particularly surrounding Iran, Israel, and the critical shipping lanes of the Strait of Hormuz, have kept energy markets and global investors on edge. The Strait of Hormuz is one of the most strategically important oil routes in the world, with a significant portion of global petroleum supply passing through it. So, whenever tensions flare in that region, markets tend to react very quickly. And that reaction has already been visible in the energy markets. Oil prices have experienced bouts of volatility as traders attempt to price in the possibility of supply disruptions or escalation. But what's interesting this time is how Bitcoin has behaved during the uncertainty. Instead of falling alongside other risk assets, Bitcoin has actually shown relative strength compared to equities and traditional markets. In fact, during several periods of heightened geopolitical tension over the past 2 weeks, BTC managed to hold its ground, and in some cases even move higher. That's something analysts have been paying close attention to. So who is watching this dynamic? Primarily macro investors, energy traders, and institutional asset managers, all trying to understand how Bitcoin fits into the broader global financial landscape. And increasingly, some investors appear to be viewing BTC less as a speculative asset and more as a non-sovereign store of value. In other words, something similar to digital gold. The idea being that during periods of geopolitical uncertainty, investors may look for assets that exist outside traditional financial systems or national currencies. Bitcoin fits that description quite well. Now, looking ahead, the next move will likely depend on how the geopolitical situation develops. If tensions begin to de-escalate, or if diplomatic efforts successfully stabilize the region, we could see broader risk assets rally, which might push Bitcoin toward the $75,000 to $80,000 range. But if the conflict drags on or intensifies, markets could remain volatile, and Bitcoin may continue attracting attention as an alternative safe haven asset. Either way, the past few weeks have shown something interesting. In times of global uncertainty, Bitcoin is increasingly being tested as a macro asset. And while geopolitics may be shaping the macro backdrop, another important factor influencing the crypto market right now is regulation. Because behind the scenes, policymakers in Washington are beginning to move forward on something the industry has been waiting for: clearer rules for crypto. New proposals involving the SEC, the CFTC, and Congress are starting to outline how digital assets could be regulated in the United States. And depending on how those frameworks develop, they could have a major impact on institutional adoption in the years ahead. So, when we come back, we'll take a closer look at the regulatory developments now gaining attention across the crypto industry. Stay with us.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
All right, welcome back. Now, our final story today takes us to Washington, D.C., where something that the crypto industry has been waiting for years may finally be starting to happen: regulatory coordination. Last week, U.S. regulators announced a new initiative often referred to as Project Crypto. The program includes a memorandum of understanding between the SEC and the CFTC into coordinating oversight of digital assets and ending the long-running jurisdiction battles between the two agencies. For much of the past decade, crypto companies have struggled with a regulatory environment where no one was quite sure which agency was in charge. Now regulators appear to be attempting something very different: cooperation. So who's involved? The effort is being led by SEC Chair Paul Atkins and CFTC Chair Michael Selled, along with lawmakers in the Senate who are advancing a broader market structure bill for digital assets. Together, these initiatives are designed to establish clearer rules for areas such as crypto asset classification and taxonomy, stablecoin regulation, tokenized securities and digital asset markets, prediction markets, and decentralized financial infrastructure. In other words, creating a regulatory framework that actually fits how crypto works. The initiative was formally announced on March 11th, with continued policy discussions and coordination happening throughout the past week in Washington. And the reaction from industry participants has been largely positive. Many firms believe clearer rules could finally remove one of the biggest barriers to institutional adoption in the United States. The reasoning is fairly simple. Large institutions typically avoid markets where the regulatory environment is uncertain or contradictory. But if regulators can provide consistent guidelines, particularly around custody, market structure, and tokenized assets, it could unlock a new wave of participation from traditional financial firms. Looking ahead, several outcomes are possible. If Congress successfully advances broader market structure legislation, we could see an acceleration of crypto products, ETFs, and tokenized asset platforms throughout 2026 and beyond. But if regulatory momentum stalls or enforcement actions dominate the conversation again, the industry may need to wait longer for the clarity it's been seeking. For now, though, one thing appears to be changing. Instead of fighting over crypto, U.S. regulators may finally be starting to define it. And of course, whenever markets move this much, crypto Twitter has opinions. Some of them insightful, some of them slightly unhinged. So, before we wrap up today's show, it's time to open the Proof of Thought mailbag, where we take a look at some of the questions and comments coming in from the community. And as always, we apply a little bit of logic. Let's see what the internet has for us today. That's coming up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time once again for the Proof of Thought mailbag, where we read your comments, your questions, and occasionally your financial coping mechanisms. Let's see what the internet has for us today. First up is from @CryptoProfit420. Bitcoin is definitely going to $200,000 this year. Institutions are buying everything. Oh, the classic definitely. Nothing reassures markets like someone on the internet using the word definitely about an asset that regularly moves 10% in a day. Look, could Bitcoin eventually reach those levels? Sure. But markets don't move in straight lines. They move in cycles, corrections, and occasionally violent emotional breakdowns, which, coincidentally, also describes crypto Twitter. Next is from @AltCoinWizard. Alt season is coming next week. You can feel it. You can feel it. Interesting. Is that a technical indicator or more of a spiritual vibration? Alt seasons usually require two things: Bitcoin stability, capital rotation. Right now we have the first one. Maybe. The second one is still waiting in line behind Bitcoin dominance at nearly 60%. So alt season might come, just possibly not because someone on the internet felt it in their aura. All right, at Macro Mike says, if the Fed cuts rates, Bitcoin is going to explode. Now, this one actually has some logic behind it. Lower interest rates generally mean more liquidity in the system, which tends to push investors toward higher risk assets. Crypto historically benefits from that environment. Of course, the problem is that predicting the Federal Reserve is slightly easier than predicting the weather on Jupiter. So, we'll see. Okay, next we have at Diamond Hands Larry. I bought Bitcoin at $69,000 in 2021. Am I finally about to break even? Larry, first of all, thank you for your long-term commitment to the cause. The good news is, yes, if Bitcoin holds above this range, you may soon experience something many crypto investors have not felt in years: unrealized profit. Please enjoy it responsibly. Next up is at Realist Trader. Everyone saying Bitcoin is a safe haven now is crazy. It still moves like a tech stock. Fair criticism. Bitcoin hasn't fully become a traditional safe haven yet. But what we're starting to see during some geopolitical events is relative resilience, which is different from complete decoupling. Markets evolve slowly, narratives evolve even slower, and investors evolve, usually after losing money. Last one for today is from at Sean Squirrelcock, and he says, keep up the good work. Well, Sean, thank you. In a sea of market predictions, macro debates, and occasional internet chaos, it's always nice to see a comment that is simply encouraging. We appreciate it. And if you'd like to submit a question or comment for the Proof of Thought mailbag, drop it in the comments below. Your idea might make it onto the show, and possibly be subjected to mild logical scrutiny. But before we end things today with my final thoughts, let's take a quick look at what's happening inside the SENB Mediaverse. We'll be right back after this.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company. Fuel your life.
All right, before we wrap up today's show, here's a quick update on what's happening inside the SENB Mediaverse. First, work continues on the back-end mechanics for the upcoming airdrop to the Tooker community. That process involves a fair amount of technical coordination behind the scenes, but progress is moving forward as we finalize the distribution mechanics. More details on that will be coming soon. On the ecosystem side, SENB staking continues to grow, with millions of tokens now locked into staking pools. That's a strong signal that the community is taking a longer-term view of the project rather than simply treating it as a short-term trade. We're also continuing development on real-world utility integrations, working toward incorporating the SENB token into the rewards programs of several local businesses. The goal there is simple: start connecting the token ecosystem with actual economic activity. And finally, a quick community update. Ember Vale has launched a new X community page called Ember Vale Underground, and we're planning a small reward for the first 100 members who join the community. So, if you're following the project, that's definitely something you'll want to check out. And with that, let's close today's show with one final thought about where the market may be heading next. As we head into the new week, the crypto market finds itself in an interesting place. Bitcoin just posted its strongest week in months. Sentiment is slowly climbing out of extreme fear, and yet the broader market still feels cautious. That combination, rising prices with lingering skepticism, is often where some of the most interesting market moves begin. At the same time, the world outside crypto remains uncertain. Geopolitics, inflation data, central bank policy, all of it continues to shape how capital moves across global markets. And increasingly, Bitcoin is being tested in that environment as something more than just a speculative asset, something closer to a macro financial instrument. Whether that narrative holds is something the market will decide in the months ahead. But for now, the message from this week is simple. Bitcoin is still here, still evolving, and still very capable of surprising the world. Thanks for watching the SENB Daily Brief. If you enjoyed the show, don't forget to like, subscribe, and share it with someone who wants signal instead of noise. And we'll see you next time. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.